We all know about this whole prospect that digital and online services bring. They're getting bigger and bigger, and there might be new entrants as well. I think the one that remains firmly entrenched is Info Edge across the services sphere that it has, be it Naukri, be it Zomato, be it 99 Acres as well. Nomura recently put out a note. I have that note in front of me, and Nomura says that they are, of course, retaining the positive stance on Naukri and Zomato. Their target prices are higher from where they were earlier. They believe there is a potential upside of 15% in the next 1 year. And it is something that Info Edge has consistently delivered for the past few years as well. So let's talk about what's the positives, if there are stumbling blocks, any. The company's managing director and CEO, Hitesh Oberoi, joins us on the show. Hitesh, good having you. Thanks so much for joining in. This is Neeraj here. Good morning. This may well turn out to be a discussion on Zomato, Hitesh, excuse me for that, though we'll talk about the other aspects too. But, off late, when we speak to almost anybody and they say, don't bother about figuring out where you want to eat from. You can order it on Zomato, you can Swiggy it, and that remains the focus point. Almost everybody that I know off late, when they're talking about booking tables at restaurants, go through your app as well. You have a certified user in me too out here that you're talking to. Tell us about how business is shaping up here. You've recently got funding as well that may help you ward off stiff competition from newer entrants, which are also piling on their muscle. How is the business landscape looking out there? Then we'll move on to Naukri as well, but let's talk about Zomato first.
Well, I must say that we are investors in Zomato, and that too minority investors. We don't run the Zomato business. So if you want to know more about the business, actually you're better off speaking to the Zomato management. But what I can tell you for sure is, you're absolutely right. The food tech space has been on a roll for the last few years. Zomato has always been a cult brand. It has been the #1 player in its space for now multiple years. Everybody I know has a Zomato app. Everybody I know looks for restaurants on Zomato. They've been reading reviews and ratings on Zomato for years. And of course now Zomato is also in the food ordering and food delivery space, where they compete with the likes of Swiggy and Ola Chef and Food Panda and so on. And this recent round of funding will hopefully help them scale up this business more than anything else and take it to the next level. And the opportunity is huge. I mean, the Indian food delivery companies are tiny compared to the food delivery companies in China.
No, the reason why I thought we'll just talk about it once is because you've recently done that, well, in a manner of speaking, done that round of fundraising where you sold off that stake as well. I think the Nomura note that I have, Hitesh, in front of me makes one key point, and that is that, and they say, and I quote, that the 15% stake dilution at a discount is a small negative in their view. 750 million pre-money versus the 1.1 billion post-money valuation. Do you agree with this? And if so, why is it that you went ahead and diluted such a stake at these valuations?
Well, I don't agree with that viewpoint at all. A small discount on secondary sales is normal in such transactions. And what you have to understand is that we have not exited Zomato. We continue to be large shareholders in Zomato. So it is in our interests to maximize the value of our total stake in Zomato. So in this particular case, the company needed money to move to the next level, and they needed big money. And the investor which was coming in wanted a certain minimum stake in the company. And we were happy to sell a part of our stake to set up the company for the next round of growth, for which it needs this capital. So I think what we've done is set the company up to move to the next level, and that will maximize the value of the stake we continue to hold in the company, which is a lot larger than what we've sold till now, right? So I think this works brilliantly for everybody. It works for Ant Financials, it works for us, it works for the Zomato entrepreneurs as well.
Okay. And now let's talk about the other businesses. Since you mentioned Zomato, and you've given out your thesis on this one as well, I'm presuming that you believe the business potential from that investment will continue to grow. Let's talk about Naukri and 99 Acres too, and start off with 99 Acres. And the reason I do that is because there is talk of how absorption in the Indian real estate market in 2018 has moved up the first 2 months as well. So while the market largely to people's perception may remain sluggish, there is an offtake in delivered products. How has 99 acres done over the last couple of months or in this current quarter as well? And do you believe, as Nomura believes, that the earnings CAGR from 99 acres could be higher over the course of the next 3 years than what you would have believed it would have been maybe 6 months ago?
Absolutely. See, what we have to understand is that the real estate market in every country is deeply cyclical. So we've had almost 5 to 6 years now of negative growth in real estate, especially on the new home side. Year after year, the number of transactions in real estate have fallen. And of course, last year was very badly impacted because of first demonetization and then RERA, because of the confusion around RERA. So our view is that we are at rock bottom right now, and things will only get better from here onwards. What you must understand and and appreciate is that even in a market which is falling, so in the ad market, for example, for real estate must have compressed by at least 50, 60, 70% over the last 4 or 5 years, right? And I'm seeing the total ad market. Even in this market where overall sort of revenue fell by 50, 60%, if not more, we were able to grow our business by more than 120% over the last 5, 6 years, right? So in a market which is falling, 99 acres was growing. Now, if the market starts growing from here onwards, which is what we expect now, it could happen this quarter, it could happen from next quarter, or maybe 2 quarters from now, and ad spend start growing, and a lot of that ad spend is going to happen now on online as opposed to offline. The 99 acres, if it executes well, is sort of in for a good few years.
Okay.
As far as last quarter is concerned, we had a good last quarter. On the back of a bad Q3 last year, which was impacted because of demonetization. Q3 this year, our revenues grew by 99 acres collections grew by 54%.
Now, has Q4 been better than Q3? I'm just wondering.
Well, I mean, we haven't closed Q4 as yet. We are a subscription business, so a lot of our renewals happen at quarter end. So we will know only at quarter end. But yes, it does appear that the real estate market has bottomed out and is now beginning to look up, at least in certain pockets.
Now, Hitesh, every time that we talk to you, we end up talking about these 3 principal areas, right? Naukri, 99 acres, Zomato. I'm sure there is more to this as well. With the monies that you are generating, you're probably incubating a lot of other businesses. Your investment portfolio now has some names which I knew, and I was just reading the note prepared by my team. There are some names that I didn't know about. What is the next leg of growth for Info Edge from some of the smaller investment stroke subsidiaries that you made? Where is it that you're finding big traction or possibilities of big traction over the course of the next 3-4 years?
Well, after a long time, we are seeing interesting new opportunities from an investment standpoint. Internally, of course, we continue to focus on real estate, jobs, matrimonials, and education. These are the 4 verticals we sort of concentrate on internally, and these are the ones we run full time. But as an investment and as an investor, we've been investing outside. For a while, we took a break because valuations were sky high. Thanks to all the money which came into e-commerce companies, the market became frothy for a while. But I think 2 or 3 things have changed in the last 2 or 3 years, and we should recognize that. And this is resulting in many new startups setting up shop and many new interesting opportunities, which we are now seeing. One, of course, valuations are correcting, so that's a good sign. 2, the government is very supportive of startups. So we are seeing a lot more sort of action at the seat level, at the angel level, a lot of new funds setting up shop. And 3, and most importantly, internet penetration is now going through the roof. So thanks to Jio and thanks to cheap smartphones, we now have close to 253 million, 300 million people on smartphones, and this number is likely to hit 500 million in the next 2 or 3 years. As a result, we are seeing a lot of action and a lot of sort of interesting startups who are now targeting rural markets, who are now targeting what has sort of traditionally been called Bharat instead of urban India, and in areas like healthcare, in areas like agri-tech. These are sort of interesting new areas, and we're seeing some action in these spaces, and some of these could become large businesses in the years to come.
But is the potential to become very large one which is difficult to predict right now? I mean, there are 6 or 7 maybe big small investments that you have, and by big and small I mean the kind of percentage stake that you have in each of these businesses. Can these become really big money spinners for Info Edge over the period of the next 3 years? Anything that you particularly watching out for?
Well, certainly, I think there will be sound financial investments. We've had a good track record of investing in startups, Zomato, Policy Bazaar, to name a few. But like is the case with any portfolio, you invest in 10 companies, you probably one or two will hit the ball out of the park, a couple will, 2 or 3 will shut down, and 3 or 4 will do reasonably well. That's what happens with every portfolio. So we expect the same to happen to our portfolio. But given the fact that we've been in the space for a long time, we understand India, we understand consumer, internet, etc., we are hopeful, or at least hope that our sort of hit rates will be better than some of the hit rates of some of the other players in the market.
I love the term, etc., Hitesh, quite frankly. Okay, one last question, and that's on Naukri too. Everybody's talking about the job growths picking up. I mean, my email address is flooded with job growth or job opportunities in the government space, from Air India to name whatever, but there's a bulk of these job growth opportunities in the government space for sure. Yeah. I read an article about how IT hiring will pick up in a meaningful way over the course of the next 18 months. How is it that you're looking at this pocket right now?
Well, if IT hiring picks up, it will be great for everybody because what we are seeing right now is that there is certainly an uptick in hiring in sectors like banking, private banking, because we work mostly with the private sector, financial services, insurance, healthcare, education, hospitality, travel, tourism. So some of these sectors are beginning to pick up, or broadly sort of what we call the non-IT space. Construction and manufacturing, we are seeing green shoots. Infrastructure, we're seeing green shoots, but I won't sort of call it a hockey stick recovery as yet. These sectors have been hit very badly, for the last almost 7-8 years now. But we are seeing the green shoots of a recovery in these sectors. I think where we have a problem is in sectors like IT and telecom. And from a job creation perspective, IT companies, IT services companies, I don't think they were net hirers last year. So while our business was not that badly impacted, because we are the sort of first place they hire from. But yes, campus hiring and a few other things and lateral hiring did take a beating as far as IT services companies are concerned. If people are hopeful that there will be recovery in IT, I think it will be good for everybody. But I guess I think the non-IT sector is doing a lot better than it was doing earlier.
You don't sound too confident about the IT hiring picking up.
Well, we have to see it happen.
Okay, one last question. Despite
IT,
please carry on.
when I say IT hiring, when I say IT, I mean IT services. IT today is very, very big. You have domestic IT services companies, you have MNC back offices, you have e-commerce companies who hire IT professionals. So that piece is okay. It's the IT services piece, which is, I guess, impacted to some extent because of what we are seeing in the US, which is, a little slower at the moment.
Okay, one final question really. Looking at all of these, and I would safely assume that if you want to look at the entire sphere, you can say that it's in a state of a flux right now. Don't quite know which way it will shape up. Would you be able to retain your operational metrics in a scenario like this in calendar year 18 for Naukri?
Well, see, so we are definitely looking to up our investments in all our businesses because we are broadly confident of the next 3 to 5 years. Now, a lot will depend on whether we are able to maintain our margins, etc. will depend on whether we see growth picking up over the next 3-4 quarters or not. We are confident that over the 3 to 5 year period, some of these investments will bear a lot of fruit. But whether our margins will get impacted or whether they will improve or deteriorate over the next 2 or 3 quarters will depend on what kind of growth we see in the economy. As you know, Naukri is in the short term is more indexed to what happens in the economy than anything else.
Okay. Hitesh, really appreciate you taking the time out and joining us and giving us your thoughts. Thanks much and all the best for the year ahead.